All right. Good morning. Good morning, everybody. One of the metrics that we use when we're calling the bottom is that we need to see capitulation. If we're calling a blow off top, then we need to see exuberance. But capitulation is that last hurrah. And it's this candle that I really want to focus on. Normally, we would have been looking for a really, really big gap down and then the recovery. And there's plenty of markets on that Monday that had that candle. When the ES didn't gap down, but instead just traveled down and then came back up, there was some concern that perhaps that was not our capitulation day that we were looking for, especially when we had all of this sideways action for the next 4 days after that. But there's another metric that we add, and it's a list of things that finally get us to the point where we say, yep, that looked like a bottom. We want to see the 10-year yield cooling off or easing up. And we want to see the two main sectors come back into play. Those two main sectors are finance and tech. It doesn't have to be both. Usually it's one or the other that starts and then the other one comes along. But that was our capitulation day. And when we go over to FX Street, the benchmark 10-year treasury yield returns below 1.8. It's cooling off. The VIX is cooling off. That's another one. So we have the VIX dropping back down below, the high 20s, the 10-year yield cooling off. We've got tech with this rocket ship move to the upside. Finance is trying to come back into play. It's just check mark, check mark, check mark. Every single thing on calling the bottoms is being tagged. So, of course, we all want to say, well, that's the bottom. And we never know for sure until much later when we get to look back and say, yep, that was the bottom. But we want to start working into the positions on the assumption that we've seen enough triggers to begin positioning for a move back up, right? I'm a firm believer in positioning to go back up when we're still going down. Same thing the other direction while we're still going up. I'm putting on shorts. So I'm already long in a lot of markets, but for some shorter duration trades, maybe the 30 to 45 days out, some decent swings with some good size spreads. We've got a lot of indications that this was a bottom. For today, we've got a number of well-lit economic events. We use these kind of for a benchmark to kind of decide, is this economic event expected to be impactful or not? It's all about Google this morning. This is another signal that earnings are still able to perform. It kind of gets investors' attention away from the Fed and rate hikes and all of that. You got to remember that the market's been pricing in this move of the Fed, and it's been a little bit of an echo chamber. Everybody's been trying to outdo themselves on guessing how aggressive the Fed is going to get, while the Fed has proven time and time again that it's not aggressive and it doesn't move quickly. And it's very likely not going to give us even half of the rate hikes that has been bandied about. But looking at the metrics, it seems that the market has priced in what they want to on the Fed, and now they're just looking for some sentiment to go forward from here. The more of these blowout earnings that we see, the more we're going to continue to see this market try to reclaim those previous levels. On Bloomberg, 5 things you need to know. This is a free thing that you can get emailed to you every day if you don't have a Bloomberg subscription. Although, I mean, I don't know why you wouldn't have one. My subscription costs like $7. You know what I mean? Like that, it's not that bad. Keep your eye on oil. Every Wednesday is an opportunity to trade USO at 10:30. The oil report comes out, and oftentimes USO makes a significant move. It's just a nice little play, much like a gamma squeeze. They're still speculating about the Fed. With this speculation on the Fed, each new data point is being analyzed with a critical eye, trying to decide, is this going to be the metric that finally pushes the Fed to go with like a 50 point? And nobody honestly believes they're going to do a 50 point. But once it got brought up, and then Homeboy was chipping his teeth about it last weekend, that really kind of rocked the market. And they spent days trying to undo that comment. But we still want to see, how they're going to deal with the runoff. And these data points are a part of that decision process. So they are mentioning there could be a surprise. So keep your eye on that for the stockpiles. Central banks in Europe, I believe, came out this morning with a policy shift. And other than that, it should be a pretty calm day. So we come in and we look at the market watch. 8:15, 8:30, 10:30. That's really about it. There's more on the list, but we'll be done by then. So, basically by the time we opened this morning, we're going to be done. We won't have any more economic events that should impact the market, because the petroleum status report, while it does have impact, I really don't see that it's going to reshape our day. We did cross back above the 20 period daily moving average. It's that green line that you see there. If we kind of zoom out a little bit, we've got the 50 period over our head, and we are back above the 20. It wouldn't surprise me if we retest the 20. So like back here, we got back above it and we retested it and then failed and dropped back below it. It's the 20 period daily moving average. So we're talking about, looking at a daily chart with a 20 period moving average on it. I'm just plotting that daily moving average on the intraday chart. We are back above it. If we go in and take a look at the volume profile, we're outside of the box on the 30 by 10. That's a 10-day, 30-minute. We've got volume by time and volume by price. Price is in green and time is in blue. And we're back up. Well, we were back above. We are in this significant level right here. So that's something that we definitely want to keep track of. Make sure that we can get through that level. If we start to break back down, say we get below 45.50, then we're likely to move into this shallow area, and price moves through shallow areas relatively quickly, like we saw yesterday with that really big move in the afternoon, right? And the same back here where we moved through that zone really easily, quickly. We do have that broadening formation, like a megaphone pattern. Notice Asia is still closed for the holidays. You can see that in the lack of participation in the initial balance. It's the 1 hour after the market opens. So a very narrow initial balance. That leaves a lot of room for later in the day. And then we have that megaphone pattern or that broadening power. The market is up near 1%, but it has a lot of room. We've got an average daily range of over 2%, 2.25. So if we haven't even gone 1%, there's still plenty of room to make another 1.25 easily. When trying to gauge what that would look like to the upside, we can just add 1% from our current location. And that puts us above the next cog line, so above 46.11. Should we break to the upside through the highest Globex point, that would be the target. A break to the downside, we would be aiming back down for that 45.11. Notice how price was working against that cog line yesterday. COG, center of gravity. Now, the 45.11 isn't some magical number, it's just a COG line. Definitely not the forum right now to go into what those lines are. They only exist on the ES. We never quite know for sure that the cog is there or that the cog is active until we start to see the reaction in price. At another day, in another time, maybe we'll go into detail on that, but they are real areas in the market, and they demonstrated their effectiveness really well yesterday. That would be our downside target should we break our Globex low, which, if I remember correctly, the Globex low is very close to the open from yesterday. So we've got a layered pivot point. Institutional pivot points like Globex low, yesterday's close, today's open, things like that. Those institutional pivot points are places where we expect the market to respond just like it did when we hit it last night. They become first touch plays. Looking at things in the big picture, do keep in mind that we're sitting inside of our own price action from hours ago, right? These are 15-minute candles, and we've been sitting inside of this 15-minute candle for hours. Yeah, we dipped down below it, but we came right back inside of it, and we just haven't gone anywhere. So there's a lot of indecision starting to build back into this market. Maybe they're starting to, rethink the impact of that amazing Google move. Or the NASDAQ. We had a trend line breakover yesterday afternoon. Finally got through that angled resistance. We're above it now, but we need to see something out of it. We're back above the 20, just like on the ES. That's the daily 20-period moving average. Would not surprise me if we retest that. We've got that broadening formation here as well. That megaphone pattern. There's a lot of indications that the market's starting to cool off a little bit this morning. Just like on the ES, we're sitting inside of our own range. We do have a little bit of econ left, right? So that's still on the agenda for later in the morning. What we really want to be watching for is what kind of day we're going to have at the open. So when we come into the open and we're in a gapped up situation like this, we're up already more than 1.5%. It's really easy to be bullish and to think that the market's going to continue that move to the upside. But we've seen a lot of times before where we get this exuberant, bullish, gapped up market. And then as we go into the open, it gets one more pop one more hurrah as the bell rings. We tag our highest Globex point, and then we begin falling back down through the morning. So as we come into the open, I'll be streaming it this morning, so we're going to be covering it there. But watch the metrics. You got the market watch with the visualize tab. We can, we have the more exact AD, the advanced decline with the money flow and the issues. We're going to be watching that, watching the grid, and looking for a fake breakout or a potential gap close, any kind of market like that. And this move in the dollar earlier this morning had everything else going down. Bonds were going down, stocks were going down, everything was going down. And that kind of stabilized. But keep your eye on that dollar. It's continuing to cool off. It's not necessarily a bad thing, right? And we've talked about the dollar before. When the dollar is making moves, the first thing we want to do is see if it's coupled with the VIX. If it's not coupled with the VIX, then very often it's a global perspective. Risk on, risk off. That scenario from a perspective of where we're pooling the money, right? Well, if they're pulling it out of the dollar, it's because they're looking to put it somewhere else. That's usually a good thing because they'll default into the dollar when they start getting nervous, scared, because they're not going to go to cash, right? The European, not even just European, global traders will get severely punished in a cash situation. They're paying fees to be in cash. Well, with the cost of those fees causing them what we would consider a loss, then they're better off just staying in the market, right? And that's what they'll do. They'll rotate into something like the dollar and wait for an unhealthy or an uncertain situation to resolve itself, and then they'll fade back out of the dollar and start rotating into other markets. When they're coming into the dollar in a sensitive aspect like that, we'll see the dollar look like the VIX. But when they start to decouple the dollar from the VIX like it is right now, it's showing they're rotating out of that. We want to be looking for where they're going, right? Because if they're rotating out of this, they're going to something else. They're not going to cash. So we want to be on the lookout for that today. Where are they going? What sectors are they hopping into? What are they pushing up on? So when it does come to those sectors, I did mention tech. It's tech and finance, tech and finance, tech and finance. It's always tech and finance. Those are the main drivers of the market. Everything else comes secondary to that. Well, if we look at the sectors that are up this morning, communications, cloud computing, big tech. So this ETF is expanded tech. I always call it big tech. I need to start calling it by its name. Expanded tech, and then technology sector XLK. All of those are leading the way this morning. Now, sure, marijuana is doing pretty good this morning, and there's a few other names like XLY. Uh, Bitcoin's up a little bit this morning. The China ETF is up, Jets, but those are negligible. They fall back compared to all these other ones that are doing really good. And I consider communications tech, right? It's a different branch of tech, but it's still tech to me. These are tech names, right? Cloud computing, it's tech to me. I mean, you can call it cloud computing all you want. Google is cloud. Amazon's got a cloud. Apple's got a cloud, right? Everybody's got a freaking cloud nowadays, and they're all big names. So it's tech. It's always tech. And then behind that, we really do need finance, right? The markets trend better. We get better recoveries. We get better moves when both of these two are working together. So finance is kind of flat at the moment. It's not really down, but we're not getting any love there. We need to see this one get off the bench and kind of get into the game. The fact that it's not down significantly is a good play. It leaves the room open for us to actually get somewhere. And for me this morning, it's probably where I'm going to be looking a lot at energy and finance. And one of the reasons for that is if something's already up 2, 3, 4% in the morning, I'm not really feeling all that interested in trading it. Right? It's already made significant moves. I'd rather catch something like finance that hasn't yet made the move, maybe get an inside day breakout. We're inside of yesterday's price action right now. So it would be a clear visual to see finance do something like break outside of yesterday's high, and then challenge that 20 period moving average sitting over its head, right? I'd even like a nice little bounce off that 50 line there before we do it. But that offers maybe a better trade opportunity than something that's already made such a massive, significant move that makes me feel like I'm trying to get in after the move has happened, right? It feels like chasing. Now, the thing about chasing, though, that we need to be careful about is the idea that momentum trading literally means that we have to buy high, sell higher, that there's not going to be a pullback. So you can call that chasing if you want to. If you're going to trade in momentum, you have to buy high, sell higher, which is completely different than trend trading where we buy low, sell high, right? We wait for the pullback. So on these markets that are really gapped up, if it's a momentum breakout, then it's going to just continue to run. So you don't want to sit on your hands and say, well, it's already made that really big move. I don't want to get in now and then just watch it continue to run another 3, 4, 5% with you not in it. It's always a catch 22, right? So keep your eye on the sectors this morning. Finance and energy are relatively correlated still. Last year, they were highly correlated. We're really trying to parse out in the new year if we've decoupled or not yet. But when finance is in play, energy's in play. Finance and energy have some really good names worth playing. Very liquid options, lower cost products. They're they're movers, right? They're really great things to trade, especially if you're looking at tech and thinking, you've missed it. Now, whether you really did miss it or not is kind of something we won't know until we look back. But if you're feeling like you missed the boat, then finance and energy would be a good way to go. All right, so as you can see, electric vehicles as a sector are doing really good today. Less than 5 of these are down below that 1%. So that'd be a good way to go. We'll kind of back up and hit some of these other names, the chip names. Those things are lit up this morning. A lot of these sectors are. You really want to be careful, like I was talking about, where we get that really bullish pre-market sentiment, pre-market rally, big moves, and then we come into the open, we make one more pop, and then just dump it all back down. We've seen it before. We'll see it again. So crypto's kind of mixed. If you recognize some of the names in my crypto list, you'll realize it's not just crypto, right? Like AMD, Nvidia, Taiwan Semiconductors, Coin. Yeah, I mean, that makes more sense. Riot. So if you're looking at those names and trying to think about, man, I mean, like what happened with PayPal was a disaster. That earnings, the cost gets you, you know. But if you're wondering where the names come from on that crypto list, there's new products that exist in the world now on these new futures. The Smalls Exchange is one of those new futures, and then FairX, FairX is another one of those new product bases. Well, with the Smalls, they have a crypto futures that you could trade, and it's a really cheap futures product compared to like trying to trade the real Bitcoin futures. That thing is a massive beast, and you've got to have a monster account to trade it. But with this, you're talking about initial margin of $660. This thing is small. You can get in and out of this thing, way less. Well, when it comes to what's in it, if the futures are an index and the index is a basket of stocks, what are those stocks? This is those stocks. right? This is the kind of deeper dive that I take a look at when I'm looking to trade ETFs or futures or anything. I want to know what I'm trading. These names are the names in that crypto list that I'm using on TrendSpider. If these names are good enough to be used for the Smalls Cryptos Futures product, then they're good enough for me to use for my watch list on crypto names in the morning. Makes sense to me. So we already hit electric vehicles. You can see that it's lit. And we kind of touched on pot when we were still on Thinkorswim. It's it's kind of a it's doing pretty good. Remember, like I've talked about before, when you're looking at these names, think about what they represent. Is it marijuana real estate, or recreational, medicinal, TCB products? Just like every sector out there, there are subsectors, and those subsectors can be the area that's really hot, right? Just like, so when we say finance, is that the trading desks? Is that credit cards, small banks, regionals? Same thing with energy, right? Every single sector out there has subsectors that make it more important to define and break down. These are the most liquid names for December. We're going to be changing this out in the next few days, looking at the most liquid names from January now that we're in February. Usually I give it a week before we make that shift, give time for the CBOE to put their data together, and then we'll go over to the CBOE and get that data. But what we're looking at this morning is, out of all of those names with really liquid weekly options, how many of those names are up this morning in the pre-market? At least a half of a percent. And I have to scroll a long ways before we finally get below a half of a percent. So the list is like 130, 150 names. My list is a little big, but it's not a stretch of the imagination to say that 2/3 of the names on this list are up more than a half of a percent this morning. So there are a lot of opportunities in a lot of sectors. Just, if you're not going to be in the large caps this morning with me while I'm streaming, just be very careful about you know a, a rally at the open tagging against our Globex high before a dump. We do have the econ coming out in a few minutes, so we may even open at the highest point and then see a little bit more of a rally, just a little bit more of a push, and then the dump, right? And I'm not saying that it's gonna dump. Price can do whatever it wants. We never quite know. But we've seen this game before, right? Where we rally up really good, we get another little burst, and then, the head fake and the rug pull. And on the other times when it doesn't do that, and we rally up all night, then we open and then we rally up even more. Those are one of our trend days from the coaching schedule. You guys know what those trend days look like. If we're opening at the highest point at Globex and the market opens and begins to rally, gets through that 5-minute open, you're triggered for the trend day. And we'll be running that thing until lunch. That's what I got, everybody. Be careful, be safe, and I'll see you in the large caps.